Hey guys, what's up? So today I'll be talking about how you can draw horizontal support and resistance lines on any chart, be it crypto, forex, etc. So as you can see, I have a chart lined up on my screen right now. I have the Bitcoin daily chart open. So thing about time frames is that the higher time frame you go, the lesser noise you get on a chart. So for example, 4 hours chart has less noise than the 15-minute chart, daily chart has less noise than the 4-hour chart, 1-hour chart, etc. So back to drawing horizontal and support and resistance lines. So for what is resistance? Resistance is basically where sellers are in charge. So and support is basically where buyers are in charge. And to draw a support or resistance line, I would suggest that you start drawing from the higher time frames. The higher time frames give you better charts, I'd say better, cleaner charts, I'd say, and lesser noise. So I have the daily chart open, right? So now I want to draw a resistance line. So where are sellers stepping in and the price when it comes there goes down because the sellers are in charge. So it came here, then straight went down. It came here again and straight went down. So I'd say this is a pretty good resistance level, right? Because price can't seem to get above here, so buyers can't get it above here. And now on to your support line. What is the area where price comes and bounces, comes and bounces, comes and bounces, comes and bounces? So I'd say it's here, right? I'll make it green for you. So green is support, red is resistance. Green is where buyers are stepping in, red is where sellers are stepping in, right? As you can see, the support broke and then it became a resistance level. That is one more thing you guys need to be aware of. Support levels, the more they get tested, the worse they get. Level is good when there's like the first test of it. So example, this was like the this is where the level came in. This is like the first test was the best test. Any other tests are going to be like weaker. Any other resistant tests over here are going to be weaker. Like here, they're going to be weaker than this because this was the first test. First test is the best test. Get that into your minds. First test is definitely the best test. Anyway, while plotting any levels, anything basically, you should always give importance to higher time frames. Personally, I do not like to go below 4 hours to draw any support or resistance lines because your 15-minute support could be the weekly resistance and stuff like that. So basically, the low level time frames can also throw you out. Like they can act as like false breakdowns, false support, false reclaims, and all that stuff. But instead, it's just like the wick forming. But on the week, smaller time frames, it'll show you that oh shit, we broke the support and we're gonna go down now. But when you come on the high time frame, you just see it's just the wick. It's just the wick, right? Moving on, these levels are just levels basically. This does not tell you where you enter the trade and like what happens in between where you're in the trade and stuff like that. That I'll make it an upcoming video, but that is like a completely different process. It's just levels. Risk management, trade management, all that stuff comes into play when like this is not it. This is definitely not it. This is just two levels. You gotta look out for two levels. The price is like moves around, stuff like that. Making these levels is like pretty easy, but taking the trades at like when it's here is like pretty difficult, right? So, for example, let's say, wait a second. Let's say we're somewhere here, right? And you see this candle. So, what would be your like first instinct? You'd buy, right? But again, that's not how the market works. So next it goes straight down, it breaks the support, it forms a candle here, and this turns into resistance. As you can see here, it turned into resistance. This is a broken support turned into resistance, right? I'll be telling you guys about all this stuff later as well. Anyway, moving on, there's also something called as time-based support levels. So I'll make it easy for you guys. So let's say this is a candle. The opening of the candle, as you can see on like the top left of the screen, I'll still mark it out, is 9503. Okay, so it's here, and the closing of the candle is here. So wait a second. Yeah. The closing of this candle is here, right? So now on the lower time frame, let's say the 15-30 minute time frame, the open could act as like the support, and it could act like a support and resistance level on the lower time frame, like the 15 minute, 5 minute, etc., 30 minute too. To make it easier, I'll show you guys what tool you can use with this daily time-based. I'll show you guys what tool you can use for the time-based horizontal support and resistance levels. So that you can like search on indicators, you can search daily open here, and as you search it, you get this. Okay, so what you want to do is double click on this. Double click on this. You can just go on here. You can just go here. Double click here. Remove all three of these. Go here. Click on circles. Okay. Now go on the lower time frame, right? I'm on the lower time frame. So here you can see that this is the daily open level of 9th March. So price comes here, breaks down from this level, turns into resistance, it retests it, and then it acts as a resistance and goes straight down until it goes straight down, right? So then let's say here new line is for the candle open of 10th March, and see this acts as support. Price comes above here, it acts as support, goes up. This it breaks down, it acts as resistance, retest, goes down. Same with this opening, opens, goes down, comes up again, and then it acts as support here, right? As you guys can see, support here, and goes up. This is how you can also use daily opens to trade. It is a good strategy, but it is low-key risky too. Moving on. So now I'm going to be covering types of support and resistance, like types of setups and support and resistance. So here's a little thing I made. So this is a setup called breakout setup. So here, as you can see, there's a resistance here. This was the highest high made. So you put a resistance line here, sorry, and then price comes up here and goes down because there is a resistance here. Then when it finally breaks out of here, it retests this level and it goes up. This is what you'd call as breakout. So it breaks out of this level and retests this and goes straight up until it again retests it later. But when resistance fails to like resist the price goes up, it turns the resistance into support, right? Okay, moving on to the next setup. I'm going to talk about resistance to support. So same example here, it was the same resistance here again. Price comes here, gets rejected, and goes up again, breaks this level, goes up again, and then it comes down and it's acting as support here, as you guys can see. So it flips it. So whenever a resistance breaks, it basically turns into support. As you can see, it acts as a pretty good support, right? This is one of the other setups, and the same thing the other way around. This was support. This was like the lowest low made here. Price went up, price came down here, broke this level, and then as you guys can see, it's struggling to get above. This is acting as resistance, which was once support. Moving on, deviation and failed breakout. So basically we had like a resistance here, price comes here, closes above this level, And then what people would now be thinking is that, oh, it closed above this level, now this is support. And what the market does is it brings it straight down. So this is a deviation in price where the people that thought that it was going to break out and then turn into support got trapped here, and then the sellers took advantage of this, and then straight up went down. This is what you call a deviation. This is one of the most popular ways of trading. A deviation is very good strategy as well. Comes here, acts as you think it's gonna break out, and it's gonna be like this. But what the market does is it gets it straight down, so the sellers take advantage of you. Right, this is a deviation or failed breakout, and these are spikes. So there was a resistance level here, and what the market does is it goes straight out. Same thing. Buyers are now like, oh shit, it closed above this level, it's gonna go higher and it's gonna turn into support. What the market does is it brings a straight candle down back into the range, this range, and then it straight goes down. Same thing again, spike here, people think it's gonna break out, oh shit, wow. The breakout traders get trapped and it goes straight down. This is what spikes are. I'll be making detailed videos on this, on swing failure patterns, etc. Pretty soon. That's it for today's video, guys. You should definitely practice all of this stuff on your own. This is not financial advice, blah blah blah. And yeah, thank you for watching.